Have you ever just looked at a stock market chart and wondered, what does it all really mean? It's usually just this one single line, but it's meant to represent decades of history, booms, busts, the whole deal. Well, today, we're decoding one of the most important lines in all of African finance. A line that tells a story of incredible growth, but also one that's hiding a pretty big secret.
Okay, so our story kicks off right here, January 1985. And to keep things simple, the market is given a starting value, a nice clean baseline, 100. Just think of it as the starting line for a 40-year financial marathon. Now, fast forward to the end of 2024, and that number, that 100, has climbed all the way up to this, 102,926. Yeah, you heard that right. That is an increase of over 1,000 times. And that's before we even start talking about things like inflation or currency changes. I mean, on the surface, it's just an absolutely incredible story of growth. An investor who got in at the very beginning would have seen their money multiply in a way that's kind of hard to even wrap your head around. But, and this is the big question, is that incredible climb the whole story? Is that it? Or is there something else at play here? Something kind of hidden just beneath the surface of this one very impressive number? Because when you look a little closer, you realize there isn't just one story. There are two. You've got the obvious story, that green line of just incredible growth. But then there's a hidden story, represented by a second, much flatter line that tells a completely different tale. Now, to understand both, we first have to understand the engine that's driving them.
To really get a handle on those two lines, we have to go back to basics. This entire story plays out in one central place. So let's start with the absolute fundamentals. What exactly is the Nigerian Exchange?
Think of it like a giant regulated marketplace. So on one side, you have Nigeria's biggest companies. They need money. Capital, right? To build new factories, hire more people, and expand their businesses. On the other side, you have investors, people just like you and me who have some money and are looking for a way to make it grow. The Nigerian Exchange, or the NGX, is simply the bridge that connects them. And the process is actually pretty simple. First, a company decides to go public, and it lists its shares on the exchange. Second, investors like us come along and buy those shares. That money doesn't just disappear, it goes directly to the company. And third, the company uses that capital to grow, which in turn helps fuel the whole economy. And this is not a new idea, not at all. The exchange has deep roots. It was founded way back in 1960 as the Lagos Stock Exchange, and over the decades, it's evolved into the modern, sophisticated institution that we know today as the Nigerian Exchange Group. So now that we know where this all happens, let's look at how we measure it all. So how do we measure the performance of this entire marketplace? Well, the main tool we use is called the All-Share Index, or the ASI. Honestly, you can just think of it as the market's heartbeat.
And this brings us right back to our starting point. The ASI, that's the official name for that line we saw at the very beginning. It's the benchmark that tracks the combined performance of all the companies listed on the exchange. And as we know now, it was officially launched in January 1985 with that base value of 100.
But how's it calculated? See, not all companies are treated equally. The index is market capitalization weighted. Now, that sounds like a bit of jargon, I know, but all it means is that bigger companies have a bigger impact. A small change in the price of a massive company will move the index much more than a big change in the price of a small company. And this chart here shows you exactly what that looks like. You can see that as of late 2024, the banking sector makes up a massive 37% of the entire index. So that means the health of Nigeria's banks has a huge influence on the market's overall direction, followed by companies that make consumer and industrial goods. To make it even more real, just think about these three heavyweights, Dangote Cement, GTBank, and MTN Nigeria. These are enormous companies. A 5% change in the share price of any one of them is enough to cause a noticeable shift in the entire all-share index. So the key takeaway is, when you're watching the ASI, you're pretty much watching the fortunes of Nigeria's biggest and most influential corporations. And because the ASI reflects the health of these major companies,
it also does another really critical job. It acts as a kind of barometer for the entire Nigerian economy. This is the key insight right here. The stock market doesn't just react to what's happening today. It moves based on what millions of investors all around the world expect to happen 6 to 12 months from now. It's really just one giant collective bet on the future. And this is why economists watch it so closely. The ASI will often start to rise before the official reports confirm the economy is growing. And it'll often start to fall before bad news, like a recession, is officially announced. It's a powerful, forward-looking indicator, kind of giving us a glimpse of where the economy is headed. And that brings us right back to our original mystery, the two lines on the chart. We've understood the first one, but what about the second one? It's time to uncover the full picture of the market's performance. Okay, here's the big reveal. The green line we started with, that measures the all-share index in its local currency, the Nigerian naira. The second amber line, well, it measures the performance of the exact same index over the exact same period, but it's adjusted for the exchange rate against the US dollar. So why does this matter so much? Because over the last 40 years, the value of the naira has changed dramatically compared to the dollar. I mean, back in the mid-80s, $1 US was worth about 10 naira. By the end of 2024, that same $1 was worth over 1,500 naira. This devaluation is the entire reason for the two vastly different stories. And this is maybe the most important thing you'll take away today. Looking at the market through this dual currency lens isn't just a clever trick. For any serious investor, whether you're in Nigeria or abroad, it's absolutely essential. You have to analyze performance in both naira and a hard currency like the US dollar to really understand the true picture. So we've untangled the mystery of the two lines. We understand the what and the how, but that leaves one final, crucial question, the why. Why does this specific market, out of all the markets in the world, actually deserve our attention? Well, for starters, Nigeria is Africa's most populous country and one of its largest economies. The NGX is the biggest stock exchange in all of West Africa. It's a critical gateway for Nigerians looking to build wealth, for the diaspora looking to invest back home, and for international funds who want to get in on Africa's incredible growth story. You simply can't understand the future of African finance without understanding the NGX. You know, we've peeled back one layer of the onion today by looking at the market in two currencies. But that leads to an even deeper question. What if the market's ups and downs, what if they aren't as random as they seem? What if, buried deep inside those 40 years of data, there are hidden rhythms, predictable patterns just waiting to be found? Because the research has revealed that there are. And in this series, NGX Decoded, we're going to explore all of them. We'll look at seasonal patterns that show how certain months tend to behave differently. We'll analyze the presidential cycle and how the market performs in specific years of a political term. We'll understand when major economic events override these patterns, and even how the market itself behaves differently in different eras. So be sure to subscribe and turn on notifications so you don't miss an episode. Next time, we're covering Nigeria's economy in 5 essential charts. It's the macro foundation every investor needs. We'll see you there as we continue to decode the NGX.